Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today we've got Mark Losh on the line. He is with Prevail Ventures. He's a Chief Revenue Officer. He's got a lot of experience in Silicon Valley raising capital. And so we're going to be talking about the top 10 cannabis stocks, news stories of the week. Mark, thanks for being on the podcast.
Good morning, Josh. Happy Thanksgiving.
Happy Thanksgiving. So this article from Benzinga talks about the top 10 stories as it pertains to the cannabis stock industry. So I want to get your take from the normalization, the real world, as cannabis kind of becomes this commodity. And so I want to get your general take. You know, you're not a cannabis subject matter expert, which is why I want you on the podcast, because you are kind of a syndicate underwriter, if you will, Chief Revenue Officer. You're running around, you're generating capital for companies looking to get into the markets. Capital constraints are really strict right now, and so getting your subject matter expertise in the general market is exactly what I want. First, why don't you just give me a little intro?
Thanks, Josh. So Mark Losh, founder, CEO, Prevail Ventures. We are a boutique advisory firm. We help early stage all growth stage companies, but mostly companies that are looking to raise capital. We help with business strategy and modeling. We do a lot of canvas modeling. We look at revenue models, and then we do a capital raise. Once we get all that sorted out, we do a capital raise, and then I tend to stick around on the board and help people with execution of sales playbooks, go-to-market strategies, and then looking for an exit.
What I want to dive into now is these top 10 cannabis stock news stories of the week. Number 10 being analysts say top U.S. multi-state operators have a huge upside following strong earnings and updated ratings and price targets. There were a lot of cannabis companies that had earnings reports. Not all of them went well. I think very few of them did, but because there's been so much of a correction and downturn with Fibonacci retracements being 62% or more in a lot of these indexes, there's been a lot of hurt on the downside of these stocks from March's all-times high. There's been last 6 months of maybe providing some opportunities, testing new support levels. But ultimately, according to analysts, is better than expected earnings makes some top 3 multi-state operators a buy from Trulieve, Curaleaf, and Green Thumb. I know you've kind of maybe taken a look at some of these articles. Do you have any opinions about whether or not it's a good time to get in, or still a little bit speculative?
I think it's still a little bit speculative. This is 1 week of earnings results. It's I don't see the trend upward just yet, although it's a good, it may be a good bottom. I would probably a little more pragmatically wait another quarter to see what the results are. But, you've got a lot of write-offs. Expectations have been reset. So guidance has been reset for the public companies. And I think they're starting to meet those adjusted expectations.
If our artificial intelligence-based algorithm is any kind of indicator, it does have predictive analytics. It was showing that we're moving sideways, which would have been a great opportunity for a straddle or a spread for an option strategy. And then we saw a dip in the cash flow index, or the cash flow indicator. And so maybe that's reallocation. Maybe that's, the short sellers. There's 190 million plus in short seller positions. But I do think that we're close to the bottom if we're not already there. So, with dollar cost averaging, if you're just going to put money in every so often, maybe now is a good time to get in, but I don't think that we've reached the bottom yet.
Yeah, I would agree with that wholeheartedly.
So number 9 is new video surfaces showing allegedly CannTrust illegal grow room in action.
On this, Josh, I just don't fundamentally get it. I mean, this is an industry that has been fraught with, illicit activity, not to mention that we are a vice industry. But, a lot of people are looking at it with skepticism and a bit of uncertainty. And this kind of move just, unfortunately, it adds to the mystique around the whole cannabis thing. And, I just think that all companies, whether you're public or not, you got to get rid of this illicit activity and run by the regulations and just do things right.
I would agree with that. I wouldn't jump the gun on that at all. Number 8 on this list is sifting through the wreckage. A visual look back at Canadian pot stocks. Their dramatic decline from the top. So it talks about the top 4 Canadian cannabis stocks having lost over $60 billion in market value from the all-time high. Talking about Canopy Growth and Aurora and Tilray. $17 billion from its peak valuation of $24 billion from Canopy Growth alone. We saw the ETFMG Alternative Harvest Index reach $1 billion, and then it's lost a quarter billion. It's down to about 860 million-ish. And so I don't know if that's the peak of speculation.
Right.
I think that there's a lot of people taking profits off the table.
Right. Well, I think it's a combination of people are taking some profits off the table, but if you were going to do that, you should have done that back at the beginning of the year. I mean, it's been a tough year with 9 consecutive months of downward spiral in the CSE. The thing you have to look at on the CSE is that 75% of its participants are cannabis companies. So when one goes sideways, they all tend to go sideways, and the whole index is coming down. That's why I believe, contrary to the way that people have done business in the past, of get a plan together and quickly seek private or public funding on the CSE or TSX. I bring a notion that let's stay private longer, which is what Silicon Valley's going through. We used to go out public at 3 to 4 years after inception. Now it's stretched out to 10 to 12 years. And so you have to learn how to run efficiently and profitably as a private company before you go to the public markets. Then the public markets will treat you more substantially, not with the volatility that you see and what's going on in the CSE.
Speaking of volatility, Canopy Growth jumped 40% last week as the quote market rebounds. Yeah. So 7 on the list is pot stocks skyrocketing on Canopy Growth's Bank of America upgrade. So just because Bank of America is reviewing this and giving it a buy rating or upgrading it nonetheless, I think that they've got some struggles. They're wanting to sell wholesale prices at $1.74 indefinitely. We're seeing in Washington State right now, close out after harvest, 7 to 8 cents a gram for million plus gram lots as people are going out of business. You're not going to survive on $1.74 per gram wholesale. And on top of that, Canopy Growth is stopping their cultivation in Latin America because of oversupply issues or whatever, when in truth, traditional agriculture is going to continue to grow. They'll put that in silos. There's no reason to stop growing in Colombia, for example, with the cheap labor force. And so I'm not really sure that they're on top of things. I think they're probably still more of a PR company at this point than actually engaged in revenue opportunities.
The way I look at it from a raising capital perspective and the investors I've talked to, the grow side of the business is oversupplied, both in capital and in product. So there's an abundance of capital, or has been an abundance of capital in the grow segment, and that's actually closing down now. It's becoming more difficult just because of the oversupply, and there's not a market for it right now. You hear of people burning their inventory because it's aged or there's an oversupply. So that sector from a capital perspective is closed down or is closing down. What's hot are the ancillary segments, the brand creation, the retail outlets. There's a big emphasis right now on retail, building those up and then looking for a larger supplier as a strategic partner. But I just think that the growth side is really closing down, and I think that's being reflected now.
Because a lot of those multi-state operators is who we saw the first and second quarter of 2019 investment capital. Those investment vehicles were going towards multi-state operators.
Right.
Where now in the second half of 2019, I think the decline in some of these valuations has made for opportunities. And so we're starting to see Curaleaf dropping $900 million to buy farms. Right. 12 million went to TJ's in Oregon, phenomenal flower. That was also including his retail and his production and processing. James Ortiz with TJ's Organics and TJ's Provisions, phenomenal flower, worth every penny. But I think we're starting to see some consolidation.
Yep. I think what you'll find, again, just experience in Silicon Valley says this, that the people who provide a platform, so platform plays, be it you're a grow facility and then you open yourself up to multiple distributors, be it online or through the retail outlets. I think if you can provide a vertical integration that gets to the customer through the retail outlets, through the distributor, through partnered by or flavored by or whatever you want to call it, white label deals, but continue to try and get the adoption through the retail outlets and then vertically integrate going backwards to the flower if you so choose. But I think that playing with the flower, handling the flower is an area right now that there's not a lot of capital going toward.
Mm-hmm. Number 6 on the list is they're seeing 3 cannabis stocks topping Wall Street's earning expectations. A lot of the cannabis stocks have declined. We just kind of mentioned that. And so these 3 that are shining through the earnings season are Innovative Industrial Properties, Valens GrowWorks, and GW Pharma. I'm not particularly a fan of GW Pharma. They want to take Marinol type synthetic cannabis and sell the equivalent of an ounce for $30,000 or whatever. So I'm not a fan of synthetic cannabis. I would also take a look at Valens GrowWorks because any symbol that's 5 digits ending in F may or may not be DTC eligible, meaning that there's a really expensive fee, $75 on the buy and sell side. DTC is Depository Trust and Clearing Corp. It allows for stocks to be able to trade and do all that electronically rather than physical paper certificates. If you have to have do a physical paper cert, that's why it's $75 on the buy and sell side. Most brokerage firms don't even allow you to buy that. And so I'm not even sure most CFOs even understand volume and availability. Most of the time it's set to block instead of real-time all or real-time limit. These OTC stocks, 5 digits ending in F, are eligible. So you might want to look into that. Absolutely.
Yeah. Okay.
So Curaleaf, talking about FDA and their inability to make claims, has kind of sent shockwaves through the CBD industry. So Curaleaf has reported earnings of $125 million. They have adjusted EBITDA growth of 169%. So their third quarter EBITDA came in at $9 million. They announced third quarter record earnings. That's not bad off revenues, $73.2 million.
That's right. That's correct. No, those are good numbers. And, again, I think that the push, both in the capital markets and the private markets, I mean, I'm certainly seeing it in the private capital raise, is people really are looking for profitability. And I know that sometimes scares people away, but you've got to have at least a roadmap. If you're not profitable today, you have to show a justifiable, defendable roadmap that gets you to profitability. And then once you reach profitability, how do you scale from there? So then because taking on a huge round of funding up front without a clear, concise, achievable, milestone-based program or plan, you're just going to spend money and it's not going to be in the right areas. So you need to really focus on reaching profitability. And from there, then how do you scale profitably?
Yeah, and I would also be careful because Curaleaf, their $800, $900 million acquisitions have been a little bit too close. So they were previous employees or partners with Curaleaf. And so you have to have more of a separation than that. And so when there's a decline in that stock price, there might be some shareholder lawsuits because of the lack of separation between the two individuals. So
totally agree with that. Josh, that I have seen in my early investigation of a number of potential opportunities, there is what I think some of the big four are experiencing right now. They're having goodwill write-downs because they made acquisitions based on inflated valuations. And of course, with the market tumbling the way it has, there's a lot of write-downs going on. So the guys who have public balance sheets are suffering from overvaluations in previous acquisitions.
Or just improper valuations like Weed Maps getting a $420 million valuation. It's crazy. That's a future lawsuit waiting to happen.
That's just that's pride before the fall. That's just your ego. You really shouldn't even accept valuations that high. They're nice. They're you can beat the chest, but in the end, it's going to bust.
Right. Green Thumbs is reporting earnings. Their revenue soared almost 300%.
Yeah,
So
right
posted
on.
third quarter revenue, 68 million, up 296% year over year, and a 52% increase over last quarter. So they announced earnings, including third quarter profits, 36.1 million. Adjusted EBITDA increase 180% over the previous quarter. They also have a ticker symbol, 5 digits, ending in F, may or may not be DTC eligible. I haven't looked into it. But looks like they are generating some revenue, so that's good.
Yep.
They're not just an LOI company putting out
Yep.
some deals and not generating revenue, so that's solid.
We've had that conversation for your viewers, just as someone who's from the more disciplined Silicon Valley side. LOIs are wonderful, and they're a statement of intent. That's exactly what it is.
Mm-hmm.
For true validation, we look for executed agreements. And those are a true measure of the predictability and scalability of a company. So while LOIs are prevalent in this industry, make sure that they're solid, and within, say, 30, 60 days at the outside, a quarter, they can be turned into an actual working agreement.
Can I make a very strong statement and say that if you have 5 different companies and you have an MOU or letter of intent and you don't have any revenue, don't even bother going to an investor trying to raise capital.
Right.
If you only have letters of intent without generating revenue, nobody cares.
I've seen some that were literally non-disclosure agreements, and they gave them to me as an LOI. There's no term. Yeah, look what we have here. And those will be, you'll just shoot your credibility right out of the gates.
We did a pitch deck review for a company that wanted to be the headset of cannabis and the leafly of cannabis. And they had 12 LOIs with like 100 people ready to go. And it's like, there's already a headset, there's already a leafly, and you have a letter of intent. You don't even have revenue. Get out of here with that. It's pretty frustrating.
There is no better validation than revenue. I know at this early stage in this market, that's tough, but you have to have revenue producing relationships. Don't be chasing things that are buddy agreements between each other.
Mm-hmm. So there is some speculation, though. Number 3 on the list is pot stock surge after the MORE Act passed a key vote in the House Judiciary Committee. I didn't cover this at all, and the reason is because I don't think the MORE Act means anything when you aren't in Congress or you aren't in the House making a vote. It doesn't matter. The little committee that's in the Senate or the House, it doesn't matter what 5 people think.
Right.
And this story is all over the place, and people are asking me on my platforms, what do you think about the MORE Act? Well, I don't think anything about the MORE Act because it doesn't mean anything. It's not going to go anywhere until they need it to go somewhere. The $1 trillion transportation package, the cannabis legalization, those are only going to pass when there's an economic downturn, when they need it to pass.
Right. They need the additional tax revenue.
Right. And it's not going to do anything in the meantime. So the individual who's putting that out there doesn't have the political clout to have it go anywhere. And this is, I guess it's important because for the first time, it's a historical landmark vote that they're willing to entertain the idea. Outside of that, we already know that they need the money. That's obvious. That's plain as day, right? But the opportunity to legalize will never happen until there's an economic downturn, because conservatives need their constituents to vote them back in, and they can't do that without an excuse, an economic collapse or financial reason to do that.
Right. Yeah. The Hemp Act of 2018, Farm Act, opened the door. And I think that's the best we could hope for at this point, is a door opening, because as entrepreneurs, we'll figure out what works, and then Congress will respond and they'll write legislation. To your point, to think that 5 guys or gals have this figured out is nonsensical. What they can do is just open the door and let us figure it out, and then try to regulate however they want to. But paying tax revenue, that should be enough. That most most people need increased revenues, be it the local judiciaries or even the federal government. And the legal side is proving that they're willing to pay the taxes, and we'll see how it sorts out.
Right. So number two, I think we've already talked about Trulieve posting an earnings beating the street's revenue with sales surging 150% to 70.7 million. So they released earnings for the third quarter 2019, which saw the company's revenue increase 22% quarter over quarter and 150% increase over third quarter of last year. They were also able to post a net income of over 60 million for the quarter. So that's another company that's actually generating some revenue. Good sign.
This Trulieve was one of the four companies that were cited in a previous article we kind of scantily looked at. Was when the market was responding to the fact that the big four took a hit so much in the last quarter, in the last nine months. But this article pointed out four companies, Trulieve being one, who were actually bucking the trend and making money on the CSE in this market, or over the counter and on the CSE. And the way they were able to do it was posting quarterly net income results, profitability. So I think that Trulieve here, what you're showing is increased revenues, 22% quarter over quarter, 150% year over year, and they posted net income. It's that, and we did it profitably. That's the kicker, and that's how companies are A, going to get funded, B, responded well to in the public markets, even in a downward spiral market. These guys are posting solid results. So kudos to Trulieve.
Mm-hmm. And the number one story of last week is that U.S. cannabis stocks are seeing their Sunshine State operators paying off big time. Talking about Florida specifically, that was one of the big monopoly states when it first came out. The Florida regulators wanted 30 years experience and $20 million in capital, which was almost worse than Ohio's original bill with 5 people, and they were the only ones that were going to be able to produce and process. That was an incredibly selfish bill, I guess, is a decent way of putting that.
Yeah. You made the comment earlier about political wins, and I don't want to get into a whole political discussion, but trying to apply that level of taxation and regulation this early on in this market is just, I don't think, it's creating headwinds as opposed to tailwinds. And I think what they want to do is promote tailwinds and then figure out the taxation and the legislation. But let the legal side prosper and flourish at this point. And to make it so restrictive, I think, is just counterproductive. And they'll figure that out after a couple quarters. We've had the same thing here in California. There's been so much regulation and legislation placed on the retail operators that's why there's such an oversupply in California, and you see companies actually burning their excess inventory. It's because they don't have enough legal distributors, retail outlets, to match the supply demand. And California legal recently banned or disbarred 340 different suppliers and retail outlets here in the state because they didn't have the proper paperwork done. And it was paperwork that took less than a day to fill out. It took like 4 or 5 hours. And once those companies get regulated or agree to abide by the terms, they'll be fully up and operating. But we do need more retail outlets.
There's a happy medium. Oklahoma and Oregon have too many licenses, over 7,000. It's California has 1/10 of that amount. It's not enough. But their taxes, they're going to increase the amount of taxes even more than they already are. And then you look at Nevada with the monopolies on the retail fronts. Florida should be figuring it out from these petri dish experiments on the West Coast. They should be able to figure out the right way to do it, and they haven't yet.
Yeah, I agree. But that's why I say up front, open the gateway, open the door, let the cannabis side flourish. And, it's just like the tech stocks. Here they are, we're talking about the FANG stocks, Facebook and Netflix and Amazon and, and Google, and they want to regulate them. Well, Christ, they're $1 trillion companies before they really start talking about regulation. let the cannabis industry flourish. And, when we've got 4 companies that are around $1 billion valuation, let them flourish, let them grow, and tax them, but tax them appropriately without hindering growth.
Yeah, I definitely think there should be more of an open market. There shouldn't really be limitations. Let them open, let them fail, let them figure that out.
Right.
Well, Mark Losh, I appreciate you being on the podcast. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. I want to thank Mark, my guest with Prevail Ventures. He's the Chief Revenue Officer there. Appreciate you being on the podcast today.
Thanks, Josh. Happy Thanksgiving.
Happy Thanksgiving. Don't forget to like, share, and subscribe, or don't, and I'm out. By the way, if you enjoy the content, please show your support with the cushy gesture of $4.20 a month on the Talking Hedges Patreon page. This will kind of help you spread the word. I've been asked to speak all over the world, from Toronto and Colombia, Spain, Miami, all over, Tokyo. But your support's important to me. I haven't monetized the podcast. I want to be as authentic and transparent as possible. I want to avoid conflicts of interest or even the perception of paid opinions. So don't forget to like, share, and subscribe, or pay me on the Talking Hedges Patreon page, or don't, and I'm out.